As you just saw, the S&P 500 is seeing some gains, and the price of oil slipped after news of a potential ceasefire agreement between the U.S. and Iran. For more on how markets are responding, we're joined now by Ian Shaffer, President and Chief Investment Officer at Galliant Advisors. It's great to have you join us. Good morning.
Good morning. Thanks, Lindsay, for having me on.
For sure. So we're seeing the direction of the markets this morning. It seems to be going up. I wonder what you think the key drivers are here in particular. Is it what's happening and potentially happening in the Middle East, or is it tech stocks? What do you think the main drivers are?
Well, we saw the pullback, earlier in the year on the headlines for the Iran war. So obviously, I think a lot of people were positioning and saying, I don't want to be, short of the market or I want to be long the market once the headlines cross that there's going to be a deal. So I think that's what we're seeing. This is the knee-jerk reaction, which is, okay, it is safe to buy the markets because the geopolitical risks are waning. I can't say they're over. I don't think you can ever trust the IRGC to completely, follow through on the deals that they sign. But I think it's a sigh of relief where people are saying, okay, this is safe. I'm going to look to some beaten down sectors to buy those stocks or cover my shorts, which in turn also sends stocks higher. So this is definitely a positive response, but I think it's a knee-jerk reaction. The real test is going to be in the weeks ahead. For sure.
Do you feel also as though maybe the markets have been pricing an end to this conflict for some time now?
I think so. The way I look at it is I'm always taking a look at not just the market, but basically how oil is trading. So sometimes you'll see that there was, Israel may have sent a missile to Lebanon or vice versa, and you'd see the market go down, but oil wasn't really going down. I think the oil market was smarter, and it was saying, I don't really think this is the beginning of a new, engagement. I think this is still, waxing and waning, leaning towards a deal, and they're finally getting the deal. So it seems like the prognosticians really had it right that this was going to be a short war. I think the ceasefire lasted longer than we thought. But again, I think this is just a sigh of relief and an early short-term reaction to a positive development, no doubt. But, is it securing long-term peace? We don't know.
U.S. midterm elections are coming up in the fall, but it will unfortunately be here before you know it in terms of fall. How has the S&P 500 reacted historically to midterms, and do you see a pattern like that happening again this time around?
Well, historically, the markets do well, in the 12 months following the midterms. But if you just think about it, if you look away from the data, you're a sitting president, you want the Republicans to do well in the midterm election. So obviously, Trump's agenda would be to, get the war solved, start hitting on his promises that he made to the American people, 2 years ago, and make sure that he's getting, a fair shake on the election results that are upcoming. So I would think if he can possibly get interest rates to get lower, I don't think he will. But let's just say a victory for him would be if they don't raise rates in spite of the inflation that we've seen. And now you have an excuse. I mean, people could say we could look through the short-term inflation because of the fact that you have a deal on the table. So even if inflation has not passed through the system yet, it will in short order, and also barring any new tariff announcements that might come. I think the market's already priced in what's already gone on there, but we don't want anything new. So his agenda right now is to put the Republicans in the best position to do well come November.
You mentioned semiconductor stocks have led to most of the recent gains that we've seen on the S&P. Do you think that trend will continue long term?
Semiconductors has been a major surprise. I mean, it did well last year, that group. And it's an easy first mover when you think about the move that NVIDIA has made over the years. And then you say, okay, so many people are trying to come and take a piece of that pie. So, okay, I can understand that semiconductors would do well because there's a catch-up play, possibly on the earnings and valuations of the other makers. But to see every single semiconductor stock going up, what it seems 5 to 10% a day, I think that's excessive. So, I wouldn't be surprised. I don't think there's danger necessarily for, tech stocks. But if there's one area of tech stocks that I could see, give way a little bit if there's a little change, I would see semiconductors possibly trade as the market, but maybe not outperform the market. And other areas that have lagged, maybe the mega caps, I could see doing better come the run now into the end of the year.
Okay, you do have some stocks that are on your radar at the moment. I want to go through those. The first one is Honeywell. You say it's got some significant restructuring happening right now. What is it that you like about Honeywell, or what is it that you're watching for, I guess?
Well, they're taking the GE playbook where GE split itself into multiple different businesses, and Honeywell's doing the exact same thing. So come the end of the month, Honeywell is going to be spinning, the core business is going to be spinning out into a pure play aerospace business called Honeywell Aerospace. And then you have the remaining business, I guess we can call it Honeywell, which is going to be a pure play automation business, similar to a Rockwell Automation. So, yeah, and then lastly, Solstice was a company that they've already spun out to investors, meaning investors who held Honeywell stock are getting a piece of a new company. They already sold. They already spun out that stake last year. So now you have the makings of a company that's going from 1 to 3, turning into 3 different pieces. But more recently, also they just had an IPO of Quantinuum, their quantum computing piece. And while investors have not yet received a stake in that quantum computing business, we expect that down the road when Honeywell divests the rest of its shares, it probably will spin out. So you might actually get 4 pieces of Honeywell. And what they're trying to do is unlock value. They're trying to get analysts on Wall Street to say, okay, well, I couldn't value all of Honeywell, similar to how I can't value all of Berkshire Hathaway. But if a Berkshire Hathaway or Honeywell split into 3, 4 different businesses, I could say, okay, here's the insurance business for a Berkshire. Here's the aerospace business for a Honeywell. I'm going to map that against GE, another aerospace company. Or now the automation business, I can map that against Rockwell. Mm-hmm. So now you have these different pieces where the analysts can do their homework and say, okay, what's a proper valuation for that piece? And we think the sum of the whole is way greater than where the stock is right now. So for investors who are looking to benefit from this, from the spinoff, I think they should be getting into the Honeywell stock before the end of the month, as the spinoff date is June 29th.
Okay, Take-Two Interactive Software is another one you like right now. Why is that?
Unfairly beaten down in the software trade down, where people were saying semiconductors win, AI wins, software loses. A few of the negative of the companies that have suffered in this have been a Netflix, which we have yet to see it hit the numbers, but the stock hasn't been doing well, and Take-Two, which has its own catalyst for the end of the year, which is the release of Grand Theft Auto 6, which is going to be their huge behemoth release. It hasn't been released in over a decade. And the old titles are still making Take-Two a lot of money, but this is going to be a huge catalyst, and there's going to be a summer marketing release come in the next couple of months, probably a month away, and there's going to be a 3rd trailer coming out. So I think those are going to be positive catalysts to the excitement that's going to build going into November, and I think that's where investors and ourselves at Galliant, where we own the stake, and we think we'll get some real nice appreciation into November when that release is upcoming.
Lastly, AerCap, you say this company is benefiting from secular tailwinds. Can you tell us more?
Yeah, especially now with the Iran war, seemingly on its end. This company is a boring company that leases aircraft, and the interesting thing that it does, it buys back a lot of its shares. So typically, on average, it's been buying back 10% of its shares outstanding. Now, when you think of a stock split, you'll get double the shares on the day of a stock split, but the stock will go down in price. This is almost like a 10% reverse stock split. So when a company buys back its shares, the market doesn't automatically reprice those shares. But over time, you should think of it, if there's a 10% buyback per year, your stock should appreciate, all things being equal, by 10% per year. Plus, you have a nice business. So, there's a lot of tailwinds. And now that the Iranian war could be in the rearview mirror, there's a lot of tailwinds for the stock to go higher.
Okay, we'll leave it there. Ian Shaffer, President and Chief Investment Officer at Galliant Advisors. It's really great to have you. Thanks so much.